the spotlight then on multi-stage venture capital firm Lightspeed India Venture Partners. They've invested in several unicorns, the likes of ShareChat, Innovator, Razorpay, as well as Udaan, and have been focusing on the Indian market closely, investing in the country for the last 15 years. So let's find out what some of the top themes are in the future, what it is that they look at before putting in money, and what the outlook is on India as an investment destination. Rahul Taneja, as a partner at Lightspeed India, now joins us on the show. Rahul, thanks so much for taking time out. Just walk us through then what the outlook is on India as a market currently, at a time when we're looking at large investors reducing their investments in the country, at a time when we're looking at this funding winter as well. Is India still standing out as a bright spot?
Thanks, Avanne, for having me on the show. As Lightspeed, we started investing in the country way back in the late 2000s. So we've been around for more than 15 years. This is truly long-term patient capital. So for us, we are not bothered by cycles that happen in investing and in startups. I think as long-term investors, we are very, very bullish about the future of the ecosystem here in the country. We would like to believe that India is still in the very early stages of its digital transformation. This is going to be a multi-decade journey. And therefore, there are so many sectors and verticals where this transformation is happening. Starting from consumer businesses to fintech, to SaaS, to commerce businesses. You pick a business and you'll see brave, bold new founders building out companies which are disrupting sort of existing practices, right? So as long-term investors, we believe there is no better time to be investing than now.
No better time to invest. And of course, you guys are betting big on the country as a whole. Now, some interesting sectors, emerging sectors, climate, electric mobility, deep tech, Web3. That's where you guys are looking at as a potential investment. Can you just tell us a little bit more about why the space appeals to you and what kind of investments you're looking to make and what you have made in this space currently?
Right. Look, one of the large parts of our investing is in what we would like to call as emergent sectors. Now, whether you think of it as climate or infrastructure or mobility, all of these fall under this specific bucket of emergent sectors. There is a global and an India-specific trend line of people wanting to move to more sustainable living. This is reflected both in consumer ownership, consumer practices, as well as on a B2B scale, right? So therefore, we think there is a very, very clear trend line and therefore an opportunity to build out businesses which are riding on these trend lines. Specifically, you could look at maybe 3 or 4 different sort of vectors here, one of which is mobility. Now, even within mobility, you could think of mobility as becoming an OEM or becoming a company which is serving some of these OEMs. Last year, we invested in a company called Exponent Energy, which is in the battery and the battery management space. That's just one of the many investments that we have progressively made in the sector.
There's also then the fund that you have, which looks at seed to Series B companies. What sectors is that primarily focused on? And can you just tell us a little bit more about the company profile that you would really look at, or what is it that strikes you before actually signing that check?
Right. In India, we are today a multi-stage fund. We are a large platform which starts investing in companies at the very earliest of stages, which is from seed onwards and all the way until pre-IPO, right? So specifically in the early stage venture fund, which is where we would invest all the way up to, let's say, a Series B, we look for 3 things specifically. One is the company or the startup building in a space which is very large? And when I say very large, in terms of consumer impact, in terms of revenue pools and margin pools, that is, the largeness of that space determines how large a company somebody can possibly build in that, right? That's number one. The second is, what is the unique differentiation a company is able to bring in terms of its proposition? which is very different versus the incumbents, or in many cases, the incumbent may not even be there. It could be a category creation bet. But most importantly, what we look at is who are the founders and what gives them the right to win in that market. So these are three things that we essentially look for. And as Lightspeed, we love to spend time with founders, understanding them, their motivations, what they're building, and that gives us really the confidence to invest in some of these companies.
So Rahul, what's the outlook in terms of the total AUM that you have in India and Southeast Asia, and how much are you looking to allocate in India over the next few years as a percentage of the total portfolio?
Right. Look, in the India Southeast Asia region, over the last few years, Lightspeed has invested upwards of $1.5 billion already. In the most recent cycle in 2022, we raised our fourth India-specific early-stage fund, which is $500 million. As well as on the growth side, we continue to invest out of a large global pool of growth capital, which Lightspeed Ventures has raised for deploying across countries. So I would say our belief is that for the right kind of company and the right kind of founders, should we choose to partner with them, at least the journey is starting right at the early stages from seed. And in the past, we spent on an average more than 8 to 9 years with companies where we've been invested.
Okay, fair enough. Just looking outside of these themes, I understand that supply chain, sectors that are related to electronics, apparel, logistics, etc., that which saw disruption during the pandemic has opened up a lot of opportunities. What is it that you're looking at over here?
There are two things that are, extremely interesting at this point for India and for the Southeast Asia region. The first is disruption of supply chains during COVID meant that buyers and users and customers across the world have decided to de-risk themselves by adding new sources of supply, right? In addition, the government has specifically been making effort over the last 4 to 5 years into ramping up manufacturing across the country. And therefore, these two trend lines have meant that Indian manufacturing and Indian exports have taken off like never before, right? And therefore, our belief is that there are many subsectors where where we are as a country in a natural position of advantage, thanks to either sourcing of raw material or the availability of high quality labor, or incentives, right? And therefore, as Lightspeed, we've ended up investing in multiple of these companies which are looking at manufacturing and even within manufacturing, more cross-border supply chains. The earliest of which, and one of the very large companies in this space today, is Zetwork. And over the course of last, I will say 18 months, we've gone on to invest in another 4 companies in spaces as varied as construction materials to specialty chemicals to apparel.
Okay, fair enough. Let's also get in a sense as to, what it was that you guys really identified before us, tapping into those now unicorns like a ShareChat or a Razorpay or Udaan. What was the thinking process behind some of them? Is there any particular memory maybe about one of these companies in particular that stood out according to you?
The most important thing, and hindsight is 2020. The most important thing is to be in business with founders who are really special. And what special means is people who are passionate about a specific problem statement, who recognize that they want to build in a very large market, and very importantly, people who are perseverant because they know that this journey is not going to be a straight line. In all of the cases that you mentioned, whether it's a ShareChat or an Udaan or a Zetwork or a Darwinbox or many of these companies, right? The most important thing that has that has really given us confidence and we have seen work is the high quality of founders that have attempted these businesses. And as venture investors, that is really the job that we are in, which is to be in partnership with the best of the best founders across the region.
Fair enough. So that's really the secret sauce before investing in some of those companies. What's the view then when it comes to as well looking at the opportunity of cross-border commerce as well? Manufacturing as a theme is really picking up in India. How do you think companies within this space can really leverage that opportunity as well, given that at a time like this, we don't really have large-scale factories like we do overseas, like in China, for instance?
Great question. And I am personally very, very passionate about this space. The interesting thing is, as you rightly said, Indian manufacturing has historically not been set up for scale. Now, you can leave out a few examples like, maybe steel or cement or many of these large infrastructural manufacturing companies or sectors. But if you look at manufacturing at large, India has a ton of small to mid-sized manufacturers. Many of these manufacturers may not be exporting directly, but they are in turn supplying to people who are doing the final assembly or who are the next level exporters out of the country, right? So I would say even within small and mid-sized manufacturers, the capability to manufacture high quality goods exists. They do not have access to export markets. They do not have access to customers. And there is a very cumbersome cross-border logistics process that none of them have the time or the money to invest into, right? And as a result, there are many companies that are coming up who are trying to solve these two problems for these manufacturers, which is A, creating access to customers across the world, and B, solving for logistics.
All right, let you go on that note. Appreciate your time. Thanks so much for joining in.
Thank you.
Moving right on then, let's also focus in on news and updates. And we understand that several startups, including the likes of Unacademy, Truly Madly, as well as Cuckoo FM, they've all moved the Madras High Court challenging Google's notice asking them to either adopt the company's mandated billing route or actually risk being removed from the Play Store. Let's understand what the contentious issue is all about. My colleague Sumita Kareer joining in with the details. Sumita?
The tussle between startups and Google is intensifying, especially those startups that are protesting against Google's billing payment systems. In fact, earlier this year, Matrimony had protested against the same and sought an injunction from the Madras High Court. And now we're learning from sources that apps like Truly Madly, Info Edge, Cuckoo FM, Unacademy, in fact, we've been told, like I said, according to multiple sources, that they are approaching courts over the issue of Google's payment. In fact, they've received a notice from Google stating that either they follow the mandated billing route or risk being removed from Google's Play Store. In fact, according to the email that was sent from Google to one of these apps, you've seen that app. ET now has accessed that email, and the cutoff date for that is mentioned 15th June. So by 15th June, all of these apps will have to go by Google's payment policies. Now, these aggrieved startups say that Google is pushing them to use Google's billing system and not an external app for payments, which they say is in contravention to what the CCI order stated. They say that Google is trying to circumvent the CCI order, which categorically stated and directed Google to not restrict third-party apps as far as payments are concerned. The other thing that these startups are saying is that if Google indeed manages to remove these apps from its Play Store, then they risk losing 90% of their businesses because most of them are online. But what does Google say in that email that it sent to one of these brands that ET now accessed? It says that your app uses a non-Google Play billing system to accept payments. In fact, it also mentions that you must use Google Play, Google Play's billing system. In fact, we've also been told that it's not just startups, but OTT players, regional players, and in fact even national players that are also moving court, the Madras High Court and some others, at least 10 of them, 10 other startups in the next few days are going to move the courts as far as this issue is concerned.
Let's move right on, and actually today is World Environment Day. And we've got my colleague Rahul Taneja who's joining in to break down for us some of the deals that have taken place within this space, which have been some of the most active VCs for environmentally linked companies, what have been the top deals in FY23 in the environment space. Sharad's got all those answers. To you, Sharad.
Well, yes, today is the World Environment Day and we'll be focusing on the environmental tech and how the investments have actually panned out. Now, sourcing the data from Traxon, we see for FY23, of course, the seed round was very limited, almost 5% participation. But in the early and the late stages, that is where the bulk of funding has happened. And for FY23, the funding is more than $2,118 million. Now, looking at how the investments has actually shaped up, especially on a monthly basis, if we look at it, there was a lull period in the month of December and January. But looking at February as well as March, there has been a significant jump when it comes to EV investments. Now, apart from this, there have been top environmental tech deals happening in the year FY23. But let's look at the important deals which have happened. First one is Serentica Renewables with securing a funding of roughly $400 million. Apart from this, we also have Ampere Vehicles and Greaves Electrical Mobility, which is shared, coming in at almost $220 million. Coming into this list also is TI Clean Mobility and Vari, which is the unlisted arm of the company. Apart from this, also looking at the most active VCs in FY23 when it comes to investment in the climate as well as EV space, we have WeFounder Circle, Bloom Ventures and Venture Catalyst, where the total deal size ranges between 5 to 11. Now, the important thing is the EV investments. There are a lot of companies lined up which are going to be soon to be unicorns, or let's call them Sunicorns. So that is something which is very important to watch out for.
All right, moving away from that, then let's put the spotlight on Nithin Kamath of Zerodha. He interacted with my colleagues Aishwarya, Patil as well as Sumita, Kareer on the sidelines of the India Economic Conclave. Let's hear out what he has to say.
The pain in terms of valuation has just begun, right? As in, so I think it had run out, quite far ahead in terms of valuation. Okay. And I think it was on back of, like everyone knows, a lot of excess capital out there. Right. So I think the correction has just begun. So I don't see how it'll change very soon.
When you say that the correction has just begun and you don't think that it's going to change very soon, because we've also seen layoffs happen, has the bloodbath just begun, or are we over that?
No, see, the thing is, it's for people starting up, it's still a good time, right? Because there is enough money available as capital. Right. I think the ones that are finding it tough are really the ones where the businesses have outrun the value. I mean, the actual true fundamentals of the business. And there, this correction was required. I mean, the only problem though is in a lot of these businesses where they've raised too much money, the incentive for founders to remain in the business when these valuation cuts happen reduces, because at the end of the day, funding, you raise venture capital is in a way a glorified loan, right? In the sense you have to return that money before the promoters or founders get to see any money, right? And I think like one of the concerns I have is now that a lot of these founders of companies that have raised a lot of money are have lesser skin in the game. Right. Do their interest to run the business still remain as much as before, right? Because usually founders are in it for the equity upside as well, right? As in, if that upside seems like it's not going to be around, the interest might drop, and then that might in turn kind of hurt the business even more.
Right. Speaking of interests, you've recently invested in Spectacon, and you're a huge fitness enthusiast yourself. What is your strategy as a startup founder? You are investing in other aspiring startups. What's your strategy when you look at investing in other startups overall?
No, I mean, see, the thing is, there are 3-4 things which are close to my heart. One is, of course, businesses that are helping Indians do better with money. Health and fitness, I think, is an extension of that, because if you want to be like wealthy, I don't think you can be wealthy without good health, right? And so that kind of extended into startups which are helping Indians make healthier choices. And then, through the foundation, we are giving significantly for startups working on climate change, etc. I don't even think of this as investments. I mean, in my head, it's for impact. I enjoy the conversations I have with the founders, and as a business, we got lucky to be financially successful, and the business doesn't need the money. And I think it's almost criminal in today's world to sit on capital and not do anything with it. So it's in a way to give forward as well.
What other spaces interest you apart from fitness? And already Zerodha exists, so you've given this tool for lakhs and crores of people to start investing and trading. What are the other sectors that really interest you?
Yeah, no, I mean, like I said, health for sure. So and climate change. Climate change is quite broad. I mean, because it's just a really complex and really large problem to solve. And I think more money, more brains. Minds have to be working on this cause. So.
Right. So, these are the sectors that interest you, Nithin. But what I'm going to ask you is that almost every sector in India is sprouting startups, right? The government is going very, very big as far as semiconductor startups are concerned, mine-related startups are concerned. So which are the sectors that are really, really going to define this year or the next couple of years? EdTech, we've seen, go very, very big. Zerodha again, food tech again go very, very big. So what are the next set of categories that will really, really drive growth?
I mean, see, the thing is, if I knew it, I would put my money there. So a lot of this is just, right place, right time, right? As in, I don't know for which.
But still, sectors if you could pick.
I mean, I wish it is around climate, right? Okay. But are we ahead of the curve, behind the curve on climate? I don't know, right? Because eventually, I think, when push comes to shove, I think, we'll be forced to change very quickly. Like how in COVID, like we all suddenly woke up and made so many lifestyle changes. So I think, as climate change problems become more real, I think the opportunity for businesses solving for that is immense. I mean, I personally think the first trillionaire on this planet would be someone who's solving climate problems.
And
right?
As an investor, you're also keen on sort of investing in a climate startup.
Well, the way we have structured our investments is that any upside goes back to the foundation from the climate. So. But it'll be nice to be in a startup which is creating impact. Any business that does well in turn actually goes and solves for some problems. So like, So I mean, with climate we're thinking mostly as impact. But of course, as I think like Mr. Anil Agarwal was saying, I think India needs to make our own chips, right? So we can't be dependent in the digital age on some other country for that.
Right. So Aishwarya, one question I'm going to ask. I'm sure Aishwarya also has a ton of questions. We don't get to meet Nithin every day. So when, of course, Mr. Anil said that, semiconductors in India needs to be making its own chips, and the government is very, very bullish about that as well. But does India really have the talent? He's being a bit optimistic. So I'm questioning on that front. Does India really have the talent? And what does India really need to do to sort of build that entire semiconductor ecosystem, that startup ecosystem around semiconductors, if we really have to grow in that direction?
I mean, it's kind of outside my core competency to be able to give ideas on this, but if any time it was possible, I think it's now, because there is almost like garvapsi happening of Indian technologists, right? As in, I mean, there are so many of my friends who want to come back to India to build businesses here because they've seen the opportunity here, right? So yeah, of course, I don't think there's talent here today, right? But if people like him are putting money behind it, because this is not like a startup funding, right? I mean, you'll need billions of dollars to be put into this. So I think if money is committed, I think people will come, because Indians are at the core of a lot of these technology businesses across the world. If they see opportunities, I don't see why they'll not come here.
You're just being humble that your core competency is just constrained to that. You have it across the board, across the spectrum. And that's why you're now on the board, on the advisory committee of SEBI. As a member of that committee, what other challenges do you think that need to be addressed in terms of trading and broking as the founder of Zerodha also?
No, I actually sit on 3 different committees on SEBI, and all the 3 committees have different purposes. Now, the one where I got on board recently is more around, like SEBI trying to figure out from the broking community, saying, what are the problems and how do we solve for it. I think in India, a couple of things, which I think I wish solved for is one is around this whole influencer business, because I mean, they've helped significantly, but the problem is a lot of them also set wrong expectations from the market, right? And when people come to invest in the market with the wrong expectation, they get disappointed. If they get disappointed, they stop doing it. So it's not really good for anyone. It's not good, in the short run it might give you a bump up, but then once people are disappointed, it's very hard to turn them around. So I think something around that, in terms of people setting expectations.
And with that, we're completely timed out on this edition of Startup Central. Remember, if you want to connect with us, suc@etnow.tv is the email ID. We'd love to hear from you. Meantime, we'll catch you same time tomorrow. Thanks for watching.